Welcome traders to Education Part 5, Completing the Framework. In this section, we will show you all the indicators provided with the framework, some of which you may take off, some of you will come with the main frame, okay? The complete workspace. The MACD and the volume versus price histograms are two indicators that come with the framework, but which are additional to the framework. Therefore, you may take them out and replace them with your own indicators. Then we have the background colors, the higher highs and lower lows, and the automatic trend lines. So let's begin. Before we proceed, we'll read a disclaimer. The information contained in this website is solely for educational purposes and does not constitute investment advice. The risk of trading in securities market can be substantial. Therefore, you must review and agree to our disclaimer before using this site. If you have not read the complete disclaimer in previous lessons, you may stop the video right here and go through the disclaimer, but we will now proceed. The MACD. The MACD is provided in this framework as another indicator which you may leave or you may take out or not put into your framework. MACD stands for Moving Average Convergence Divergence, and it is a technical indicator commonly used in trading to analyze an instrument's price movement. The MACD indicator is calculated by subtracting a long length exponential moving average, in this case the green and white line, from a short length EMA, the red line. When the red line crosses above the green line, it is considered a bullish signal, indicating that the instrument's momentum is shifting to the upside. Conversely, when the red line crosses below the green line, it is considered a bearish signal, indicating that the instrument's momentum is shifting to the downside. If the green line is above the zero line, here's the zero line. If it's above the zero line, the color is green. And it's below the zero line, the color is white. In the chart above, the green line was above the zero till about 7:30 a.m. In this case, till about 7:30 a.m. And then there was an uptrend until it turned white from 7:30 a.m. till about 7:55 p.m., signaling that there was a downtrend. When both the red and green lines are close together near the zero line, when both of these lines, the green and the red, are close to the zero line, they're both around the zero line, that means that there is consolidation, price consolidation. If the green line is above the zero line, okay, the red vertical lines, okay, below the zero line represent a retracement in an uptrend. Similarly, if the white line, when it's below the zero line, the vertical blue lines indicate a retracement of the downtrend. Histogram of volume versus price. The histogram of volume versus price is a charting technique used in trading to analyze the volume of trades at various price levels over a specified period of time. It is a visual representation of the volume traded at each price level during a specific period of time. When the volume is placed at the bottom of a chart, it will show the volume of each bar, and the volume shown will depend on the duration of the bar or candle, and therefore the volume is time dependent. The volume versus price is typically displayed as a histogram on the right side of the range chart, with each bar representing the volume of trades that occurred at a specific price level. This you will see in the next slide. The bars are arranged side by side to create a bell curve, which can help traders identify key levels of support and resistance as a potential areas of congestion, as well as a potential areas of congestion. Traders use volume profile analysis to gain a better understanding of the market's overall sentiment and to identify areas of price consolidation and potential breakouts. Overall, volume profile is a useful tool for traders who are looking to gain a deeper understanding of market dynamics and make more informed trading decisions. Let's take a look at the histogram of volume versus price included in the framework, in the chart. The volume versus price histogram located to the right of the chart and the volume traded at a specific price is indicated by white and red lines. The white lines show low volume traded, and the red lines show high volume traded. The red volume lines indicate where most of the trading has taken place, and therefore it is usually referred to as no man's land. Since this is the consolidation area and there is a lot of buying and selling without a definite market trend, the profile gives the trader an indication of where most of the trading volume has taken place up to that moment since 1800 hours New York time. The area between the two light blue lines represent about 68% of the trading volume, and it represents one deviation from the VWAP. This is the VWAP line. This is one deviation from the VWAP line. This is minus one deviation from the VWAP line. The area between the two yellow lines represent about 95% of the trading volume, and it represents two deviations from the VWAP up and two deviations from the VWAP down. The other 5% of the trading is above and below the yellow lines. The other 5% is concentrated between below this yellow line and this other yellow line upward. Okay? Important. If there are more than 5,000 bars since the start of the trading session at 1800 hour New York time, due to very high volatility, the volume versus price histogram will stop working because the maximum bars back allowed by the TradingView platform is 5,000. In such a case, the volume profile will not show again until the start of the next trading session at 1800 hours. That is why we have placed the volume profile separate from the framework, so that you may take it off if you so wish. You have another volume profile you want to put in there, you may do so. background colors. The dark green color indicates a possible start or a continuation of an uptrend, and the dark red color indicates a possible start or the continuation, in this case, of a downtrend. Let's look now at higher highs and lower lows lines. The higher highs in an uptrend, here we have an uptrend, we have a higher high compared to this one. This is a higher high, this is also a higher high. Is shown as a red line, as is a lower high. This is a higher high, this is lower high, lower high, lower high, lower high. In the downtrend is shown in red color. Similarly, in an uptrend, higher lows are indicated as light blue color lines. This is a higher low, this is higher low, and also lower lows. This is a lower low, lower low, lower low, lower low, lower low, lower low, and so on. Okay, they're indicated as light blue lines. So these lines will help you see what is the last high and what is the last low line as the trend develops. Finally, in the next slide, you will see the automatic trend lines. Automatic trend lines are shown as dashed white color lines. The upper line joins the highs and the lower line joins the lows of the current trend. So this is the upper line, it joins all the highs. This is the lower line, it joins all the lows of the current trend, bringing to your attention the market tendency as it develops. In the final part 6, we will look at the whole framework provided and give some trading tips. So see you in part 6.